Hey guys, it's Edgardo Valentine and Scott DiGregorio in another installment of Ask Your Favorite Lender and Ask Your Mortgage Guy. So today we want to talk about what happened yesterday in the stock market and with the bond market.
And
today, it's been a couple of big days with a lot of changes. And what do we have?
Yeah, well, look, before I get into the chart, let me kind of see if I could break it down in layman's terms what's going on. I'll handle it yesterday, you handle today. So yesterday it was all about Apple. The phones that I can't show you because I'm recording on, Apple had some bad predictions yesterday, and it tanked the market. We've talked in the past, when it's bad for stocks, it's generally good for interest rates. There's a lot of variables, but often that's the case. And yesterday, Apple made some pretty dire predictions, and it tanked the market over 600 points. And we saw a corresponding nice gain in or improvement in interest rates. Now, the other thing that was interesting that happened yesterday is the ADP Employment Report comes out. That's not the real employment report. You'll talk about that because that happened today. But the ADP Employment Report came out, which said that the job creation was much better than anticipated, which in theory should have worsened interest rates, but Apple trumped that by a mile, and because of that we had a huge surge in the stock market. But
then this is what happens.
We knew what would come.
So those two things happened at the same time, and it gave us a tell of what was going to happen today. So it allowed us to hit ahead of the report that we received today, which was a very good jobs report, which, like he's saying, in turn makes the stock market get better and worsen when it comes to interest rates. The interest rate got much worse today.
Absolutely.
So, because we had that ADP report today, we knew that this was going to happen yesterday. We got the ADP report yesterday. We knew that this was going to happen today. So, ahead of today's jobs report, we're able to lock the people that we had floating and protect their interest rate and their bottom line ultimately. Yeah. Now, what do we have here to show you?
So let me show, let's see if I can get this where both phones could see it. So look, what we see here, this is the mortgage-backed security bond market. And what we see, notice higher on the chart is a lower interest rate is worth mentioning. Green's a good day, red's a bad day. Notice we've had pretty steady improvement in interest rates. And why is that? We've had a lot of bad economic news coming out, and that's the reason for that. So, but if we see here, okay, that right towards the end there, we have a huge green surge yesterday, which is what we were talking about yesterday, followed by this big red line down today. So what we were able to do is we were able to lock in the interest rates right at the very top, knowing that today would reverse it and again secure those rates. And this is, look, back in the days when rates were 3.5%, let's be honest, you just needed an order taker, right? Who had the lowest fees, who had the lowest rates? I didn't care about knowledge or expertise. It didn't matter. In today's turbulent times, more than ever, you need to, as professionals, we need to understand what is going on. How is this going to impact it? Because you got to keep in mind, rates worsen and people either pay more forever or even worse, they don't qualify.
And these things happen quick. I mean, we're talking about, it's a completely different rate to lock you guys or to lock the clients yesterday at 5 o'clock p.m. than today at 10 a.m.
Well, and I'll give a perfect example. So I'm sitting down with a client yesterday, right? And I'm taking an application. And when I sat down with her, I had quoted her a particular rate.
Sure.
An hour and a half later, when I was done with the meeting, I went to lock in her rate. Her interest rate had improved by almost 0.5% while I was sitting down with her. So remember yesterday afternoon, we had that huge surge.
That's right.
And then this morning, again, we
huge lost all the gains.
Absolutely.
We lost all the gains that we had
100%
yesterday.
of it.
But look, this is what happens when we can look at the statistics that we received yesterday that totally predict what was going to happen today. So we just need to keep looking at those signs and keep protecting you guys' pipeline. So if you keep having any questions, let me know. We thought that it would be important to talk about this today.
Yeah, and listen, don't trust a lot of the talking heads on the news. They don't actually understand what's going on with the bond market. Trust your financial professionals here for that type of information. And look, you have any questions, shoot them over to us, either privately, DM us, or leave it as comments. And hey, we'll see everybody next week.
That's right. We'll see what happens with the market next week.
Absolutely. It should be an interesting roller coaster ride.
All right.
Take care, guys.